My question is this. Are you able to give maybe one or two examples of what constitutes investing in a lifestyle portfolio or in a security portfolio? What kind of investments does that constitute?
Thank you. Have you ever been asked, are you risk averse, risk taker, or somewhere there in between? Have you ever been asked that? I find it a very unnecessary question because you cannot box a human being in one category. We are too complex to be boxed. So one way that we view risk from a human being point of view is the stage in life that you're in. We are a couple of people here. Some people here have probably secured their lifestyle. Even if they lost their jobs, they lost their businesses, they would never lack anything to eat. Yeah? Those people can take more risks than the ones who cannot survive such a situation. So the kind of investments that we invest for lifestyle portfolio and security portfolio are very safe investments. Very safe investments. We don't touch equities like investing in companies in the stock market. We'll go for more fixed income like securities. Locally, Pan-African, depending on the risk profile of also the investment that we see. Our aim as investment professionals is always to do two things. Maximize your return, minimize your risk. So it is not a black and white thing, but it is something that it's a dynamic thing that we have to manage on a day-to-day basis. How we were investing 10 years ago is very different from how we're investing today. I was telling another group, since I began my investment career, it's the first time that the Kenya government ability to repay debt has been questioned. So we are in very, very different times. So that's something that is done. It's more, when you think about a portfolio, think about a doctor. You're suffering from malaria. You have symptoms of headache. You have symptoms of low appetite. When you go there, they'll give you some headaches. They'll give you something to boost your appetite, as well as something to address the real issue, which is malaria. So when you come to us, depending on the financial circumstances of your family, we are able to tailor something for you because every individual and family is very unique. Even one lifestyle portfolio is very different from another lifestyle portfolio. That's what I'm saying.
Is it realistic to categorize 4 portfolios according to age? Because I feel like they are graduated from 1 to 4. So is it also realistic to, to bracket?
To see it in sync with the life cycle of a human being.
Exactly, yeah.
Yes. It's a good question. And honestly, there's an attempt to do that. But we human beings are very dynamic and we are very different. Warren Buffett started investing when he was 11 years old. So by the time he was 30 years old, he was so financially ahead than people who are 70-year-olds. So age is a generic way of looking at it, but we cannot stick to it. We still must dive into the unique circumstances of every individual and every family to be able to advise on where you should start. But all of us should start from the same place. Whether you're a billionaire or you live in the slums, we have very different needs. A billionaire probably needs half a million shillings just to keep things going. Someone else who is in the slums who probably need just 10,000 bob or 20,000 bob to keep things going. So we have very unique financial circumstances. To whom much is given, much is required. So it's a dance.
You made it clear from your Bible that you are investing.
Yep.
And in current situations where the economy is, what do you advise as an investor? Where do we invest? And apart from that, as you say, pay yourself first. Why do you suggest that way? Some of us in the service industry, where we need to pay our staff before we pay ourselves. So what do you advise? Because sometimes we pay ourselves and we don't have money to pay our staff. So you still want us to pay ourselves for us and let our people, those who are making our brand out there, to suffer, or to, what is that?
Thank you. That's a good question. Where do you invest? For those of you who probably know me, you notice I have a designation at the end of my name, CFA. And for us to keep that designation, we are required that we can never advise on what to invest until we understand unique circumstances. You and him may be exactly the same age, you live in the same neighborhood, your kids go to the same school, but you're so different. So it is equivalent to going to a hospital and everybody is given malaria queen. You will never come back to that school. So I can say Safaricom is a good investment. It is good for you, but it is so bad for him because you have a 10-year long-term ability to wait and go through the difficult times of the company. But he needs to pay school fees next week. So that's why you will not hear me anywhere go and say, please go and buy this or that. Are we together? So if you want to know where to invest, come, we sit, we talk, I understand you, and then we'll tell you how to invest. Yeah? Actually don't charge. You actually don't charge for consultancy. Yeah. And again, I have to really approach this as a professional. Let me give you a personal example. A couple of years ago, it's a while, I was convinced that Safaricom was the best buy in the market. I was buying 50 million shares of Safaricom every day for some time. And when I got to accumulate Safaricom worth about 600 million for my customers, one morning I was walking down Ngina Street after just parking my car. And you know the way you peep on the headlines? I peeped on the headlines and I saw this big headline saying Airtel slashes tariffs by 67%. You can see, I remember the headline very clearly because of how it affected me. Immediately, I felt sick in my stomach because I knew what that meant. We had just launched a price war. And Safaricom was definitely going to respond. I remember the tariff then was 8 shillings per minute, 8 shillings per minute. And it quickly came down to 3, I think went to 2 and then went back to 3. I met Michael Joseph and other investors on an emergency meeting. How will Safaricom respond to this? We are big stakeholders to this. But before I could meet Safaricom management team, I had a decision to make. I knew which direction this thing was going. So I went to my office, I called my group CEO. I said, today we are going to have a very difficult day because of what the headlines are saying. He asked me, what do you propose? I say, we must push the sell button immediately. He said, proceed. The market opened at 9:30 exactly a.m. And we can see the market on our screens. And the first price that was on the board was 5 shillings and 65 cents. It was quickly taken. Next was 5 shillings and 50 cents. And within no time, we were at 5 shillings. At 5 shillings, you could feel the stillness in the market even though you were in your own office. Nothing was moving. No one was buying because we all knew anything below 5, we are all making because the floating price was 5. In a moment, one of the foreign investors gave an order to sell everything he had at 4 shillings and 90 cents. And from there, the floor was broken. The last price I sold at was 4 shillings per share. I lost 160 million shillings on that investment. But it went all the way to below 3 shillings. I took my remnants, invested somewhere where I was convinced there were better prospects. Fortunately, I recovered, but many people never recovered for a very long time. So, if I had just come from a forum like this and I told you guys, the thing to buy now is what? Safaricom. The following day you would have met me, I would have had 0 shares of Safaricom. But you'd still be holding what? And you'd have told me, I'm a liar. But we don't just invest to make returns. We are risk managers. We are constantly watching, maneuvering, and maximizing returns and minimizing risk. And that's why you can't beat us. Because for us, that's what we do every day, every hour, every minute. That's what we do for you guys. Why pay yourself first? When I mean from a business perspective, if you're running a business, you pay yourself from what? Profits. Profits come after doing what? Paying your suppliers, paying your staff. So the profits that come, you must pay yourself. If there is no profit remaining, you know you're on the wrong side of the rope. And you need to do something, because then you will end up with what economists call employment in disguise. You are very busy, but you are not adding value to the GDP of the country. Because GDP comes from the profit. Yeah. So pay yourself first. That's how it's seen from that perspective. Make sense? Thank you.